Everybody. I first have to say that I'm really excited to be here again. I was there here last year when the blockchain conference happened, and it's really great to see such a crowded room again. And I mean, I don't have to say much how the situation became, especially right now, very extraordinary. How big everything grew, and also especially in the cryptocurrency world, there is extremely flourishing market at the moment, and not even to mention, of course, Bitcoin. I mean, cryptocurrencies and blockchain are not necessarily. Blockchain is the underlying technology behind it, and it's the technology itself. Cryptocurrency is more kind of one implementation or one use case of it. But this talk is specifically targeted at blockchain in general. We're going to talk about briefly the definition and what the benefit is, and then we're going right into the use case in cryptocurrencies, because this is just everyone who has really read about it and has done some work on it, or have done anything related to it, really knows that cryptocurrency is an exciting phenomena. And then at the end, we're talking about investment opportunities in cryptocurrency mining, in Bitcoin mining, in Ethereum mining, etc. And why mining is the core and the essential part of cryptocurrencies, and also of blockchains themselves. So let's get right into it. This is a slide of some maybe have seen this kind of cartoon. What is a blockchain? And I think you can summarize it very, very short. In very short, with very few words, but of course it's a bit tricky to understand it. So a blockchain is a digital asset that is duplicable, but not changeable, not manipulatable, or how you can also say immutable. So what does that mean? For example, in the digital world, everyone, I mean, we can just copy and paste anything. It's all bits. So we just copy. If it's a database, if it's a music song, if it's a movie, any file we can duplicate very easily, and just also, if we have duplicated it, we can change it, we can fake it, and this makes it impossible to have kind of unique digital things. Because you can do that. Now blockchain came, and blockchain makes it possible to have unique digital assets, because a blockchain is a duplicable good like any other digital token, but you cannot change it. You cannot change it, and no one knows. So this is very important to understand, and this is really this is why all this innovation is happening, because now we can have digital unique assets. So and that of course gave rise to cryptocurrencies, to Bitcoin, and to a lot of other innovation in that space. Because, for example, every Bitcoin is unique, of course. There's 21 million Bitcoins, and that makes it possible to have this form of currency in a digital currency, in a digital world. So, duplicable, but not changeable. Digital good. There is a difference between public and private blockchains. In the private blockchain, we refer mostly to, for example, blockchains that businesses want to use for their own purpose. Conglomerates of businesses, banks are getting together, making their own blockchain maybe. The difference of a private and a public chain is that private chains are mostly not completely open, so not everyone can participate. And they are, in a way, not fully immutable, because businesses maybe like to have the privilege to maybe change the chain, the blockchain, if there is an emergency happening or anything. For the public blockchains, like cryptocurrencies, nearly all cryptocurrencies are public blockchains. We have a fully open system. Anyone can participate, can do mining, can use it, etc. But of course, that also brings with it that it's immutable. So of course, there is now the Ethereum. Some of you might be more into the details there. There is a current debate of whether there is some hard forks done on blockchains or not, but I don't want to go into the detail. In general, public chains are really, they are as they are, and they cannot be changed or manipulated. And this is also the big strength of it. And that's also why cryptocurrencies have the chance to be digital currencies. Of course, there's also other differentiations. For example, in the decentralizations, the public blockchains are more decentralized. For the private chains, you have only a smaller kind of group or conglomerate. For the public, you can distribute it arbitrarily, and the more distributed they are, the more benefit you get, because you don't have this threat of central parties. For example, if you have a Visa or MasterCard and Visa is under attack, their sender is under attack, it's dangerous for the whole network. For Bitcoin or for cryptocurrencies or for public blockchains, there are no central entities that can be attacked and then can harm the network. That's really a big benefit. Of course, also for public blockchains, there is no authority, which is in a lot of cases a big benefit. There is no one that can dictate the system. Whereas in private blockchains, the more private a chain gets, the more of these benefits you're losing, because if you contract a blockchain so close that it's only few entities, 1 to 2 entities, you just lose a lot of innovation. Because you make it, there's a bigger threat that it's getting attacked. It's the authority. Those small businesses are basically the authority, etc. So I think this is, if you can understand that, that gives a very good, I think, image of what's the difference. And I can say, for example, there's big businesses like IBM, etc., that focus more on the private chain side, helping businesses with their own implementations to solve their problems with blockchain technology. And then there is this public space where there's other applications, but also the cryptocurrencies. Let me just quickly ask, who of you is familiar with cryptocurrencies or has heard the term cryptocurrencies so far? Cool. Okay, that's good to see. Just to explain, I mean, Bitcoin was founded 2009, and Bitcoin was actually the thing everything started. And of course, people then said, or businesses or researchers said, okay, Bitcoin is great, but we can use the technology behind it and use it for our own purpose. So that is when it happened. They extracted from Bitcoin, they extracted blockchain technology, because Bitcoin was the first blockchain. And since Bitcoin, there has been a lot of other cryptocurrencies, and it's really an innovative playground, and a lot of innovation has happened in that field. So it's very good to see that so many people have heard about the term cryptocurrencies already. This is just a rough overview of what the cryptocurrency market looks like. There are the miners. I will explain that very shortly, what role they play. There's the merchants, and there's the exchanges where you can buy the cryptocurrencies, and they vitalize the networks themselves. So all three parts are essential, of course. You need the users to use them, you need the exchanges to buy the tokens, and you need the miners to validate the transactions. This is a short summary of the features a cryptocurrency offers. It's really remarkable, I can say. Why is it remarkable? Because cryptocurrencies, or let me also speak concretely about Bitcoin, give an opportunity to move money independently of any third party. For example, if you want to move money right now over banks, there is always an intermediary bank in between that that has, of course, a certain kind of control, and yeah, it's just always in the middle. With Bitcoin or cryptocurrencies, you have the opportunity to send money peer-to-peer. So, for example, someone in America or someone here can send a farmer in Africa directly money without having intermediary banks or anyone in between that costs fee, that costs time, etc. And you can really send Bitcoin from any place in the world to anywhere else within light speed and without any boundaries. So there's no restrictions on that. And of course, this is a big thing, I see, because people now have the choice to really, from an idealist's perspective, have the choice to own their own money by owning their Bitcoins and also send their money to anyone else without having any intermediary in between. So before, it was very hard there was not so much options to have that. You're mostly binded to banks or and have to trust their money to the banks, which I don't want to say it's by definition wrong, but it's now just the opportunities there now for people to have the choice to have independent money, and it's there. Coming to cryptocurrencies concretely, I want to highlight just two of them now. I've spoken to more before. We have the big giants right now is Bitcoin and Ethereum. Those are the biggest cryptocurrencies. Bitcoin has a market capacity of 20 billion US dollars right now, and Ethereum is around 1.5 billion. The others, there's Dash, Monero, Litecoin, and really, if you look it up on the internet, there's more than, I think, 700 cryptocurrencies right now, because everyone can create their cryptocurrency. But of course, it's always, if I create a cryptocurrency tomorrow, I mean, the value only comes, of course, with the adoption and with the use case it brings. And Bitcoin is so valuable, or people are spending so much money to buying Bitcoins, is because the network is the most secure right now, and it's the biggest, and it's the first cryptocurrency, and it offers all the features that I was explaining shortly before. Now, why is actually, or what makes Bitcoin or cryptocurrencies special now, coming also to the decentralization aspect, and this is really that there is no central authority, and this can only work, and this is really the innovation of Bitcoin. This can only, the big trick on this was that there are some entities called miners, and miners are distributed all over the world, and they are validating the transactions. And this is the fundamental difference. Visa or MasterCard or any other payment system, they are mostly central, and then you have the central aspect. But how can you decentralize this and have a decentralized verification process that not belongs to one authority or one single player? And this is done by mining. And this is happening right now all over the world. There's large mining facilities distributed, and anyone can mine and participate. And those miners are validating the transactions, the Bitcoin transactions. And for that to be incentivized, the Bitcoin network is giving out a block reward, a reward for the ones that validates the transactions. And this block reward is at the moment for Bitcoin around 1,800 Bitcoins every day, which is a lot of money. It's around $2 million every day that is given out to all the miners. And this gives the incentives that miners are doing it. Otherwise, people would say, why should I use so much electricity and put so much effort in it if I don't get rewarded? And this is really also a very big benefit that Bitcoin offers, this mining concept, that you have these miners that get incentivized from the system. Don't want to go too much into the technical things, but just a rough outline of how the mining industry evolved. There was at the beginning, Satoshi Nakamoto who mined basically with his laptop. He was the only miner in the space. There was none other. And that, of course, means that he mined all the Bitcoins at the beginning until the competition arose and until more miners came. It's really incredible. Satoshi mined more than 1 million Bitcoins in that time, and he still has them in his wallet. Very short time later, people figured out that they can use graphic cards as a next step. They're more efficient in mining, and then engineers figured out FPGA modules can be even better, and then there was a big jump to the ASIC mining machines, to ASIC chips. Those are chips that are specifically designed to only do the hashing algorithms for Bitcoin. Small nanometer designed chips that are just extremely powerful and do nothing else than Bitcoin mining. And it's really interesting because there's a story, for example, maybe you have heard it, or that it didn't happen too rarely. People that were in the early days started to mine. For example, I think in England that was one where someone mined with his computer. I think more than around 4 to 5 years ago, and and at one point there was no market for Bitcoin. That was really the very early people. And at one point his girlfriend said, well, please shut down, or what do you do with the laptop all the time? It's making a lot of noise and it's hot. And he said, yeah, I'm mining Bitcoins. And at some point he was just saying, okay, well, I don't know, I have to put it away. My girlfriend is also not liking it, so he shut down the laptop. At one time he woke up in the morning and he read that Bitcoin is now trading at more than $100. So he really directly jumped up and checked how much Bitcoin did he mine previously, because he remembered, oh, that can't be true. So he figured out that he mined more than 300,000 Bitcoin, which is more than 300 million. Or 30 million by the time they traded over $100. So he, of course, jumped up and said, oh my God, where is this laptop? And he realized then that the laptop was thrown away and put to one disposery, or to one waste disposal place. He then basically was searching for investors to search this place to get this laptop, because it's $30 million value on that laptop. So, he raised some money and got a search troop together, but they didn't find the laptop. So it's really, I mean, those stories are incredible. So that means this laptop is still somewhere, probably destroyed, but there's 300,000 Bitcoins on that wallet, and no one has access to it because the private key was on that laptop and is not available anymore. So this is just remarkable. And he mined that with his own laptop. So by now, the mining industry has gone into a very big shift from this early stage people where there was the home mining, you plug your machine at home and you mine a little bit, to the shift of large scale mining. And this is the current state of it. And there's big mining companies, not too many, to say it up front. And those mining companies have, of course, picked the best place on the world where there's the lowest electricity prices and the best condition for mining, and have built up huge facilities and to enjoy the economical benefits of it. You see here on the top, there's our Enigma farm, and on it's a farm in Iceland. Also on the lower picture, you see an ASIC farm of us, also in Iceland. This is just one example. There's also other companies doing mining, but I just want to highlight the fact that this was the shift in the market. So it went from home miners that all mined a little bit to these large-scale facilities, and of course, the large-scale. Why did they grow so much, and why did that happen? It's because the big companies that were in these highly efficient places had a lot of economy of scale and a lot of other benefits: lowest electricity prices, very good environmental conditions, etc. And of course, also on the software side, there is controlling tools that make it more professional, more optimal to mine in large-scale environment. And this is really a very exciting space right now. So there's constantly a war of the big mining companies to find the places on the world where there's lowest electricity. Some people get, or on some places there's electricity nearly for free, but of course it has to be treated with caution because it needs to be, of course, if you want a large amount of electricity, it needs to be proper, and of course it needs to be legal. So some people, I don't want to, maybe some people find access to cheap electricity, but it's mostly not so sustainable. Sometimes it's even how can I say, if you steal electricity somewhere, or this can also happen, but of course this is not a business model, and this is not something sustainable to grow, because if you steal 10 megawatts or something, at some point some people will realize that something is missing. This now is okay, I need to be very quick. This is now, this slide shows, or basically what I want to just quickly at the end, I want to explain that there is an opportunity in mining, because a lot of people are interested in that. We get a lot of questions. So Bitcoin and other cryptocurrencies, you can either buy or you can mine them. And a lot ask, how can you mine them? And of course, what's the benefit of mining, or should I buy them? And the answer to this question is, mining is a very attractive investment if you are doing it right. You can burn yourself a lot, and it can be, you can lose a lot of money. But if you do it right, it's a very attractive investment. There's a high chance that you're making a good profit. And how to do it right is basically you have to be the most efficient player in mining. And efficiency is categorized in three components. It's the hardware efficiency, the infrastructure efficiency, and the electricity rates. And you see on the chart here, we have three types of miners. Each miner has the same capacity. And now we are looking at the returns of the miner over time. And you're seeing very quickly that the green miner comes to a halt at one point. The green miner is here the lowest efficient miner, and the blue and the orange one continue to mine. That is because the lowest efficient miner has the highest cost to run a mining farm, and of course he will be the first one that is in the reds and has to turn off the machines. But if he turns off the machines, he gives the market share to the rest of the others, so they will earn more. Because there's every day, for example, 1,800 Bitcoins mined every day. So that, of course, means that the ones that remain in the market are more efficient. They get a higher return then. And at one point, even the orange miner is coming to a halt, but the blue one gets a boost. So if you are the most efficient miner, this is really the key in mining. Of course, there's also other opportunities. For example, you can leverage on all the altcoins. You can, for example, if tomorrow Dash or another cryptocurrency is just skyrocketing in price, you can move the hash rate to another coin, and you can mine that and leverage on this. You can really use the whole innovation of the altcoin market also if you do it right in mining. And this is what we're doing. Another chance, and then I'm there's a lot of other opportunities, but these are the two most interesting ones in my opinion. If you are wanting to participate in mining in the large scale, in how can I say, in a professional investment level, with larger investments, or on a securities level, there is an option right now to do it via a fund with the Logos Fund. It's a fund that we have founded a year ago, and it offers high net worth individuals or companies to invest in mining in a securities level and really buy regulated, buy into a fund. Logos Fund is a BaFin-regulated entity. It's a German financial authority, and I think I don't need to tell too much about those returns. If you look at it, maybe it's difficult to see, but the inception was on June 2016, and the chart is going to December till the end of the year. And you see on the blue line on the red line, the Bitcoin price, and on the blue line, the Logos Fund, and you're seeing a return of more than 40% profit in 6 months. This is something that is quite unusual for funds, but of course, because the market is flourishing and because we can leverage on the infrastructure and on the benefits of mining, it's possible to do this. Of course, there is a risk involved in every investment of cryptocurrency, and in general, I don't need to say, but I think those numbers are speaking for themselves, and we're very happy to be part of that. And last word now, now is the time to get into mining. Now is the best time. Why? Because there's only 25% of all the Bitcoins that can be mined left. And for example, for Ethereum, I mentioned it briefly earlier, there is around 15%. Of course, there's some variable it depends on, but there's only a few coins mined, left to be mined. And it's getting harder and harder. It's like gold. The competition is growing. It's getting harder and harder to mine. And for example, as a big investor or also small, especially now the big investors are thinking, how can they get most of the Bitcoins in the best time and for the best price? And they can, of course, buy them on the market, driving the price up, or they are doing it in a clever way with mining. To end this, I would really say, of course, you can look at the economical equation. More and more people are learning about Bitcoin and cryptocurrencies, and the supply is getting thinner, and it's harder and harder that new coins are going into the market.